TGIF Warriors, hope everyone had a good week. How's everyone doing today? I would have to say that the surprise of the week was dollar strength. Now it was, this should have been your warning. Everyone was looking at 95. Most of the chatter on Twitter, most of the people I talked to were negative the dollar. And most likely the reason was last week we had a reversal to the downside. So a lot of people gave that the benefit of the doubt that we'd get a C. So I think this took a lot of people by surprise, especially since, all the talk of bullish dollar sentiment. And, basically all it did was correct this recent rally from 93.80. Okay, so this was really, I think, the surprise. Also, a lot of people came in pretty bearish yen, except ForexAnalytix and our own Joe Perry, who went on Twitter, he's on Twitter too, but actually was interviewed by, I think one of the more prestigious interview content sites, which is Real Vision TV, Raoul Paul's company. And when he made the interview, I believe it was the end of last week, he said, don't short the yen here. He's looking for the potential to get short up around the 113 level. That still looks viable, especially if yesterday's rout is just a B wave in the indices and we have another rally to come. Okay, and when you look at that, you have an inside week, traders. Okay, so the ideal setup would be, maybe we firm up a little bit more here, and then sometime next week, take out this week's highs, which were, here, right here, and maybe head to 40 or 50. That's a pretty good rally. I'm not saying, it's going to happen. It could break down. I sold this big bulge. Actually, I've been trading bearish ETFs, and it was such a nice gain in a day I took it. So, maybe I'm talking my book because I'm flat and I'd like to see another rally to reinitiate that position. But the most bearish thing the market could do next week is take out this week's high sometime early in the week, and by the end of the week or anytime take out this week's low to have an outside candle, a bearish candle, after a neutral candle. And that's exactly what an inside week is. It's a neutral candle. Okay. Also, I think Friday is a good day to join ForexAnalytix. So I remember early on when I was here, sometimes the market just doesn't offer a lot of trading opportunities, but with this type of action that we have, market action, we have 7 active patterns in play. So plenty of ideas being provided by the team here. Okay, so you could see the winners are much bigger. Andre long silver, Greg along CAD, Greg along gold, nice 3% win. So some of these active pattern and plays look pretty good. And I think one of the most impressive trades was Steve Olge used the Saudi news about the murder of an American resident journalist from the Post, used that news to short crude in this range and covered here at 69.99. So, that's on just a one lot, that's $1,500 on that pattern in play on a one lot in crude in futures or CFDs. I guess you could break it down. But I'd say this trade alone would have paid for your subscription to ForexAnalytix, a yearly subscription, at least a few times over. So, and that's just one trade. Okay, and you could tell when our team doesn't think something's working. They're not stubborn. Blake's especially good at that, at really knowing himself. And if it doesn't feel right, it's not doing what he thinks it should be doing, he doesn't wait to be stopped out. So he got out early and took, I call that a scratch trade. So, when you're wrong, if you could be wrong early and recognize it, even though your hit rate may be 50%, what doesn't show up in your account is, managing things when you're wrong, avoiding bad trades. Avoiding bad trades is just as important as being in successful trades. It doesn't show up in your balance, so it's easy not to, notice it, but think about it. So, perhaps we could help you avoid one bad trade that you would do on your own because you came to our traffic light page and you started looking at all the different analysis on our traffic light page and look for patterns where Elliott wave harmonics and basic technical and macro and candlesticks kind of line up. It's a great song by Joe Bonamassa, Stop, and it says, don't run red lights. Okay, so you have that, you have all the charts that explain it, and really only $1 to check it out for 10 days. That shouldn't be hard to recover. So today's a good day to join. I mean, I look at the team that we have here, and I think it's the strongest on the net. If there's a better place, I'd like to check it out. Let me know, okay, guys? So I want to thank everyone for their support. We've gotten a lot of new members lately. Go to our blog. I think we were ahead of the crowd and looking for this initial break that we got in the S&Ps, all the indexes. Another great call by Joe, this time on Bloomberg. He's everywhere. I think Joe's going to host Saturday Night Live this Saturday. So tune in to see our own Joe Perry hosting Saturday Night Live, armed with charts and a telestrator. Okay. So I believe Steve is on the road today, and Dr. Blake Morrow is up next. His doctorate is in exploiting markets and getting out of the way early. Doctor, are you in the house?
I needed to see a doctor yesterday.
I heard about it.
Wow. I don't do that. I don't act like I'm in college anymore.
You tried though, buddy.
I tried the other night.
Yeah, you gave it the college try.
I gave it the good old.
Because early in the night, I saw that picture. You looked, happy, ready to go. You're ready to go.
Oh,
well,
yeah.
I admire your courage. I just think about it and I get a hangover.
Oh my gosh, it was some friends of mine. We're all Marines together, and
so you're those buddies, yeah.
Yeah, so it was one of those.
And you can't be a P, you got to be a man.
No, thank God those don't happen often. That's all.
Gotta be, Marine is. There's nothing more macho than a Marine, right, man?
I guess. I guess.
How are you? So I hope you didn't trade during that party.
No, actually, let me think about that. No, I did not. I had 0 positions on.
Yeah.
I did trade a little bit yesterday. I actually managed to make a little bit of money.
Oh yeah, and I wanted to mention. I don't know what your out was, but what a brilliant call. I know you're short Euro Yen this week.
I was, and I actually I shorted again last night. It was a real key support, and I actually shorted it twice yesterday on it breaking lower, and last night
no heat on that one, Blake. One candle after another going your way. Love those.
It was, yeah, it was obviously a selling off. But okay, so let's talk about this really quick. First of all, the euro yen broke below some pretty key support yesterday. So last night we were just back testing, this breakdown point around here, and I said, this is a previous breakdown, so we're rallying back into resistance, which now today we're pushed up a little bit higher because this news that that Donald Trump and President Xi from China are going to meet at the G20, so that helped risk sentiment overall, and it pushed these pairs back up. But you notice that the euro yen just pushed right into the resistance zone. This is the previous support zone, so it's the resistance zone. So it was kind of heading higher into the news. So it should stall here at the 129 level. I mean, we are here at 129. It might break higher, and it might start squeezing a little bit more. It is possible, but it was a decent risk reward, and it still is. So I'm still looking for it on the short side. But you can't stay around for long, because the markets, you look at what happened yesterday. I mean, by the way, we sold off pretty aggressively yesterday, and we came out of a triangle too. So that was a pretty steep sell off. You can see it was something like that, and we came out of that triangle and we sold off. But we're recovering this morning again on this news. But you would think that the response would have been a lot stronger than what we've got thus far. And I have to imagine that asset managers are probably playing a little bit more defensively at this moment. So it'll be interesting to see what happens when equities open here in an hour and a half. But Steve is going to be gone, so we are going to be covering CPI together. I'll be here. Stelios is, I believe, here as well, and I'm not sure if anybody else is going to be here, but at least Stelios and I and Coach will be here through Canadian CPI. So what I'd like to do is I'd like to cover some of these majors going into the data. So let's take a look at the euro first and foremost. So the euro actually, we came and tested overnight the really critical support, and Dale pointed out earlier that the one thing that caught the market off guard was the dollar strength that came through this week. Now, risk appetite is stronger, so the euro, is getting a little bit of a lift. But I'm surprised, but I'm not surprised that the euro. I'm not surprised that the euro is higher because of the risk appetite that has come into the market. However, it is still weak, and the euro is weak because if you saw Italian yields yesterday, which take a look at the Italian bond market. That completely crapping the bed, and yields are ripping. So this is a really big risk right now, is that Italian yields are flying. How's Italy going to service its debt? That's what I keep wondering. So so the euro being under pressure is not surprising. Now, again, it is higher this morning on risk appetite being a little stronger, but I don't know if I really want to be, lured into this, this euro dollar, strength that we're seeing. But technically speaking, we could squeeze a little here. I mean, you can see the euro's, pushing right up against a downtrend line. So we might make our way back up towards 114.80, 115. I think it can happen. But I think longer term, we've got to be thinking that the euro is probably going to crack lower. May not be. Well, S&P has just spiked up too. You can see it right here. S&P just There's an intraday chart. You can see we just spiked right into resistance. But the euro dollar, it is into a downtrend line. Excuse me. Ooh. Anyway, if this support goes at 114.30, I would think that the euro is going a lot lower. I would think that we are heading down towards the 113 level, because this is obviously going to be a pretty big and very well defended low, right where we're at. And actually, let me see if I can do one thing for you guys. Let's do this. Let's take this low here. Let me magnetize that.
And Blake, good morning. I'm going to put some context later on when you're done with that, just in terms of the euro.
Okay. Sounds.
Yeah, I'll let you do that.
Sounds good. I was just going to say the 78% retracement is right here at 114. But if we take out the support, dropping down to 113 and change would not surprise me at all. So with that being said, before I move on, Stelios, what's
So basically, I mean, people are probably aware of all this, but the main story with the euro remains Italy. And what we had yesterday is we had some European Union leaders voicing concerns about the Italian budget, which, for those who don't recall, has been set at 2.4% of GDP, and that they voiced concerned about that, and they actually said explicitly that it needs to be revised. And then we had an answer from the Italian government where they said, this is not up for revision, et cetera, et cetera. But this morning, apparently, Salvini, one of the two coalition leaders, is flying back to Rome to, as he said, to address the concerns. So we have no idea what's going to happen. It seems to be again, it seems to be a kind of a poker game between Italy and the European Union leaders and how this thing is going to go. This government does seem quite determined. They sound quite different to the Greek government, who, a couple of years ago said all those things and then did the exact opposite. So I watch with great interest in what's going to happen, because let's not forget the Italian debt is nearly 10 times bigger than the one of Greece. So it's not a game. It can't be rescued like Greece was rescued. And I personally have said this a couple of weeks ago, and I still believe this. I don't think this story is going to go away very, very easily. I don't think it's going to be another case where they find some kind of botched solution, they kick the can forward, and everybody's happy. So that's for the reason, this is the main reason why I think the euro will continue to underperform. I mean, it might have some rallies, relief rallies, but I think it's going to, I'm looking to play the euro on the short side. Actually, I am short against the kroner, as most people know.
Okay. So here's the Italian 10-year, bond market, and we were showing the 20-year just a bit ago, but man, look at their bonds. I mean, this is seriously a concern, right? I mean, their bonds are in trouble, and yesterday, I mean, we came crashing lower, and you would think that this move in the Italian bond market might really start to weigh on the euro dollar. As far as the eurozone goes, Italy is, out of all of the eurozone countries, what's it in terms of size?
Well, Germany is number one. Then it's France and the UK, for as long as it's still in the European Union. It's joint second, and then it's Italy. So it's it's one of the big countries. So
right. It's not Germany, but it's one of the big ones, right?
Yeah. And it's funny. Go on.
I was just going to ask. France isn't in great shape either, is it?
Well, it depends on what you define great shape, compared to what. No, but yeah,
compared to it, like that, it's possible that too could end up being a domino.
Yeah, and Spain as well. You know how these things are, and actually Spanish bonds, I think, are slowly starting to drop as well, in anticipation. It's funny because the bond market, I mean, my experience of all these years that I've been, doing this job, the bond markets are usually the first to react and are usually the ones to have it, to get it right. So, I remember when I was working in the city, I used to sit very close to the bond market makers in the bank. And whenever there was something happening, those were the guys we would go to straight away. So, I always watch what bonds are doing to give me hints on where everything else eventually is going to lead.
What a great education you got there, buddy, in many ways, right?
Well, I've been lucky to be in some good and bad situations, but yeah.
Yeah, but I mean, as far as learning the business, I mean, besides the trading floor, where's a better place?
Oh, yeah.
And
absolutely.
you were like on the trading floor.
Yeah, I was for 10 years, so I've been there.
Yeah.
And but that's always been the case as far as trading goes. I always pay really close attention to what bonds are doing, and and you're 100% correct, Stelios. They tend to have it right earlier than any other asset class. So that's why it's always important to keep an eye on what bonds are doing, yields are doing. So
and isn't that what they're even the Fed is most afraid of? Even though rates are up, the yield curve for a few days, Blake, was what do they call it when it's the opposite of inverting. They were starting to. Okay, well, the back end was responding, and then a few days later, after some equity weakness, the yield curve looks like it's headed, back to zero again.
Yeah, it's steepened a little bit, and now it's flattening.
Oh, that's a word. That's a word. Thank you, buddy. Jump in quicker when I have brain farts.
Well, before the data comes out, I mean, let's take a look at the cable. I mean, the cable's been acting really poorly, and Stelios, you've been really correctly too, pretty bullish the pound, in recent weeks, and it's had a nice move off the lows. But what do you make of the price action right now? Because it doesn't look good. It's not very responsive at the moment.
I mean, I said, you're absolutely right. I said this yesterday on the webinar. It feels like the market keeps wanting to sell the pound. And we see this, no matter what kind of data we get, more often than not, they're going to sell it because of the big uncertainty. I understand that because not only do we have the negotiations for the Brexit negotiations going on, and there's no decision yet, but also we have internal problems, within the government, and Theresa May is close to facing a vote of no confidence. There's all these things happening. And I understand that people are very wary of the pound. My bullishness, though, comes from the fact that I think that eventually, and I've said this over and over again, people who watch the webinar every day is going to be sick and tired of me of saying this, but I think eventually there's too much at stake for both sides, and the UK is not Greece. It's it's a huge chunk of the EU, so there's too much at stake for them to just let go and see what happens. It just makes no sense to do it. So I think at the end of the day, there will be some kind of agreement. Will it be a good one, a bad one? Who cares? It's going to be an agreement. The uncertainty is going to be lifted. People will know what they're dealing with. It's exactly the situation or similar situation to what we had in Greece. For a year, we had no idea what was going to happen. People didn't know what to do as a result. They just held off everything. And then as soon as we saw what was happening, we got this government that we have. I don't want to voice an opinion on politics, but anyway, it is what it is. And from the moment that you know what you're faced with, then you can make your plans. And I think that is going to be the big trigger for the pound. We're going to get some kind of decision, and then not only will people know what they're faced with, but also the Bank of England afterwards will know what they're dealing with. And that will hopefully allow them to raise rates a little bit faster because, let's face it, inflation has been above 2%, quite a bit above 2%. Wage growth has been quite a bit above 2%. There's no other reason for them not to hike, more than once every year or year and a half than the market's pricing in right now. So as soon as that's done, I think they're going to start hiking, and there's going to be a little bit more confidence. And the reason why I'm bullish the pound is that I think the market's probably pricing around 50-50 chance of a no-deal Brexit, and I don't think it's going to happen.
Okay.
So,
Very good.
yeah.
All right. Thanks, Stelios. You know, a couple other quick things. We should probably note that the Aussie is pushing right up against some pretty good resistance here, and I'm gonna actually extend this out. You can see like right through here. This is all, I would say this is all a pretty decent resistance zone, and the Aussie's been, you know, it's obviously been very responsive. And actually, if you look at the Aussie crosses, like the pound Aussie, Euro Aussie, they are very weak, and we're going to take a look at those after the data comes out, because that's where the action's been all night. Now here's the Kiwi, and the Kiwi is up at trend highs. I have to warn you guys, before you get too bullish the Kiwi, and I've got a sell order in place in just a few pips actually, and trend line resistance comes in at 66.15, and that is the channel, big channel resistance. So for those of you now Amanda, who's in her chat room, she said it exactly, and I'm gonna show you what she posted. She posted a chart that looks like this. It's like a cup and handle pattern. I personally, and she wrote this as well, I don't like cup and handle patterns unless we come off of a flat top. Then we do a cup and handle, then it's a breakout, right? So this is coming from a downtrend, and it was, so there's no plateau for me. So I don't play it like that. So I'm not, in other words, yeah, in other words, I see what everybody's talking about, but I think that this squeeze could just simply be a squeeze. And then
also, Blake, you took that trade earlier in the week because it didn't get to the trend line, and eventually it's getting to where you thought it would go to.
Yeah,
and you know,
yeah, and I did actually short it here earlier this week at you're right, I shorted it at 86 or 83 or something like that, and I made some decent money, and I've been hoping we'd get up here. I'd really love to see it, like, you know, another 10 or 15 pips higher, and then hit this resistance. This is a good risk reward setup for a short. That's all I want to point out right now. Now we do have, like I said, we have Canadian CPI. Okay, so Canadian CPI is coming out. Retail sales is also coming out. Big swath of data, and we're going to pull over the Bloomberg system here in just a second. I'll pull this over in just a moment, but let's take a real quick look at the Canadian. Now, the Canadian, faced with a very similar situation, we have a big trend line resistance, and the 127% extension comes in at 131.15. I do not have any position going in the dollar Canadian. I was actually hoping to sell it up here. I don't know if I'll do that, because if stocks are risk averse, for whatever reason, because I'm looking at S&Ps right now, and we barely hit highs on the day, and we were up like, what, 7 points, and now, you know, we're up maybe like 5. I don't know what it is, but and you would think, oh, based on Donald Trump and, you know, the U.S. and Chinese president meeting, the G20, we'd see like a bigger response in risk appetite. We haven't. So if this market just, you know, we go into panic selling mode, kind of like we did yesterday. I mean, remember, asset managers cannot withstand, you know, another 3% drop from here. Most funds are down or slightly positive for the year. They just can't take it. So if the market goes defensive at the end of the day and we start to see some selling, the risk is the dollar Canadian can really break out here. I know everybody's like, well, the Bank of Canada is going to start raising rates. I understand that, but the whole market knows that, and it hasn't helped the dollar Canadian. Matter of fact, since NAFTA or USMCA has been announced, the dollar Canadian has gone from 128 to 130. All right, so it you know, I'm not convinced that that's going to stop the dollar Canadian, not at these levels. We could get to the mid 130s before people start thinking about rates again, in my opinion. So I don't have any position on the dollar Canadian. We do have data coming out, so we're going to watch it really closely here, because we have less than a minute. We have less than 20 seconds. So let me grab my Bloomberg. Boop, 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 boop. Just pay attention to this. Retail sales, CPI, all this information here. So you ready, Stel?
I am ready, my man.
You ready? Ready? I got to keep this over here so I don't lose it. Okay. Because it'll go behind my screen. Data retail sales week. Wow, wow,
Yeah.
wow, wow, wow. Look at that. Oh my God. Even revised numbers came in weak. Dollar Canadian is ripping. Holy moly.
It's a sea of red, yes.
It is real. Look at CPI below expectations. Oh my God. Oh, look at the year over year. Whew. So again, I'm going to reiterate that, you know, the potential for us to hit, you know, this 113, well, 131.15 is, we're almost there. I would not sell it now because that data is so weak. I would not want to stand in front of that. So yeah, that
Bull bear line just breached, pushed on our alerts, which as a member, people get it whether they're here or not, right on their phone.
Yeah, so the bull bear line right here at 131, and this is because this is really important. You know, dang it, I didn't want to do that.
The hottest technology in the universe.
Because this is really where, you know, the bulls and bears are going to be fighting it out right here. Because guys, if we break above this 131.15, it's, you see my big blue arrow here. It's going to be gone. You know, it's going to go, and hell, you don't want to be short. You know what I mean? Because remember, the whole market, and I've tweeted this even a couple of times. The whole market believes that the Bank of Canada is going to raise rates, and so now those expectations, instead of three future rate hikes, maybe it you know, expectations have just pared back to 2, and I'm going to have to go to my team in Greenwich to figure out exactly where expectations are, because they can dice the numbers and figure that out a little bit later. But
Greenwich Village?
Greenwich Village, yes. Yes.
Great location.
In Greenwich, Connecticut. Anyway, so again, we're at the 127% extension. This should be good resistance. If you're long, you probably want to take some off here, but you know, if you're short, you better be careful, because if we start cracking this trend line, it's gone. Like, see ya. Wouldn't want to be ya. Man, those some ugly numbers. Some ugly numbers. So there we go, right into resistance. Again, I'm not trading it, so I'm just trying to help you guys navigate it. If you're long, you know, hopefully you just took some off. But now dips back down to like, if you think about this as being 131, like this is being the bull bear line. All right, so let's just talk about this really quick. Now, if you just took some off, good for you. All right. Now, if this is the bull bear line, there's going to be stops of people that were just chasing it. So their stops are going to be below 131. It might break below 131 to like 130.85. Then you want to be a buyer again there. So you want to be a buyer at this breakout point. That's the way, you know, if I'm scalping it around, you know, which I just don't want to get stuck, you know, trading around this crap right now. That's what I'd be looking for. Now, it looks like Greg is going to be popping in here in a few moments, so we're going to let him speak, and it's good because you guys get a good Elliott wave counts on some of these major indices. So is Greg here? Let me see if he's here. I see him popping up on Skype. So, he isn't.
No, I'm actually gonna go in and look at the numbers that constitute the inflation print, because this was for September, and you know, oil was still rising in September. So it's very interesting to see. I'm very interested to see what's actually driving this drop in CPI.
Okay, so while you're doing that, Stelios, now again, if you guys were long the dollar Canadian, we got to 131.15 is really, you know, that was really big resistance. We broke it, or we came up to it. If you took profits, good. Now start looking at this dip, because now we're getting here, and I should probably put it on a 1 minute chart just to give you a better feel. So now the dip down into the mid, you know, 130.85, if you can get it, that's probably a great place to be long. So yeah, again, I'm just trying to, you know, help you guys navigate through the craziness of these you know, pieces of data. I actually might if we dip down here into the 80s, I might pick up some dollar Canadian, because those numbers were so weak. They were so weak. Let's see if we can get him. It doesn't look like it wants to give it to me. And we popped right back up. We dipped below 131 briefly, and then we just popped right back up again. So let's see. Let's see if we can get down into the 80s.
Actually, Bob, as friend Bob is saying, they did legalize pot, so maybe somebody screwed up about Canada.
They did. I'll tell you what. I'm a little skeptical about all this legalization of marijuana everywhere, because man, you think we got some drunk drivers out right now, put people on the road and smoking marijuana, and I mean, you're under the influence. How are they going to test for that? Because I don't know. It's a scary thing. It's a scary thing. Anyway, okay, so there's the dollar Canadian. We're going to keep an eye on it. Obviously, I'll be watching it through one eye actually right now. Let's see. Hold on. Did Grega pop in? Is he here yet? Oh no.
Let me check.
Hey, Greg, hold on.
No, he's not.
Okay, so sorry, I just had to type to Gregor really quick. Wow, look at the euro yen is really buckling here. Did the risk appetite turn? It looks like it was going to.
It's coming off, and
yeah, I mean, look at the euro yen. I mean, this is a really big rejection right into resistance.
nice.
I mean, yeah,
Look at that RSI. It confirmed the low too.
What's that?
The low on the RSI at
right
the
here.
recent low.
Yeah,
that's a lot of selling pressure. Anything under 30.
Yeah.
So next time it won't go under 30, but confirmed lows rarely hold. Great trade.
And the other thing about this too is that if for those of you that use RSI extensively like I do, I mean, I have it on every chart. We worked off those oversold positions so for relative strength. So coming up here into resistance and being mid-range at the RSI, it was really just a setup to get short again, because when you get oversold, you don't usually stay oversold or overbought, but the price has to work off those conditions, and once they work off those conditions, then the ability for that to continue back in the direction becomes quite high, and that's simply what we're experiencing here in the euro yen. So I again, what's going to be really scary is if the euro dollar, which we just rejected this downtrend line. This is a steep channel, guys. This is a really steep channel, which is not good for bulls. It really isn't. Let me. How come that didn't work?
Dixie is the new Vixie.
Here we go. The Dixie is the new Vixie. So I'll tell you what, volatility has been crazy, and we had a really nice pullback in volatility. We got to watch the VIX now, because now we're like actually looking constructive for bulls, which is bearish for stocks. A couple other things, the dollar Swiss. I wanted to point this out because everybody's like, God, this Swissy is so strong. It is very strong. I am a little worried that if stocks come under pressure, that the dollar Swiss is going to be, come under pressure as well. But what will convince me that the dollar Swiss is going higher is if we break above this broken trend line here, which comes in around 90. Well, let's just call it par or parity. If we break above parity, that's going to be pretty bullish for the dollar Swiss. There's been a lot of Swiss National Bank members that have not retired, but basically relinquished their posts, and it's something that the market's really not talking about. But you got to watch the shuffling around with the Swiss National Bank too, and from a price action standpoint, it looks really bullish. But risk appetite has to continue to stay strong in order for the dollar Swiss to continue to go higher. If we start to see stocks buckle, the Swiss franc could really start to see some pressure, bullish pressure, which means that it would go, the dollar Swiss would go down. The dollar yen. Let's take a real quick look at the dollar yen. Dollar yen again. This is Hey, Grega, how's it going? Hey, give me 1 second. Let me just talk about the dollar yen really fast. The dollar yen, as you guys know, we have this major uptrend line, and right now it comes in around 112. If the dollar yen breaks through 112, as I explained to you guys on the blog just last week, that if we break this uptrend line, my 2 cents is stocks are going to buckle. We will start to see some downside pressure in equities. So, and that comes in around 112, 111.90 today. So we're only 40, 50 pips away from there. We were trading close to that yesterday. I mean, we were down at 112 yesterday. So if we break through these lows like yesterday's lows today, I wouldn't want to be long equities. There's, no if and or buts in my mind, actually, when or if that happens. So just keep that in mind. Grega, what's happening, man?
Hey, I'm fine. I'm just listening to you. I also think that the dollar yen could be very interesting, especially that trend line that you highlight as well could bring more downside, and agree. But based on the Elliott wave principle, now you have 5-wave drop from that October high. So I think that this trend line could actually be broken.
Really? Okay. So now this is interesting, guys. Since we were talking about, do you mind showing your chart?
Yeah, sure.
Yeah, because this is going to be really interesting because, Elliott waves. For those of you guys that don't know, well, you all should know. Grega Horvat, he has his own Elliott wave service, obviously, but he is a contributor and a team member for ForexAnalytix and provides all of our Elliott wave analysis. Updates the charts once a day, pretty much on all of them, on at least 90% of them every day, and so it gives you a good look at the Elliott wave counts. For those of you that are like me, that I can't see them, it's not my specialty, and it's really something that's kind of like me and taxes. I look at taxes and it's a bunch of numbers and it just doesn't make any sense to me. So I always pass it off to somebody who does know my account.
Taxes never make sense. So.
Yeah, they don't to me either. I mean, I understand the concept of doing it. I just don't. It never just registers. It goes into the wrong part of the brain, I think. Same with Elliott wave, and this is why I love seeing Grega's work on our ForexAnalytix system, because it helps me get a better view of what he sees, because I can't see it. So anyway, Grega, let's see what you got with the dollar yen.
Sure. So actually, the first thing that I want to highlight is probably candlestick formation on a weekly basis. So you can see that market actually failed to break above these previous swing resistance levels. In fact, I can see an evening star formation on weekly chart. So the higher is the time frame, more significant is the candlestick formation. So actually, this suggests that we may see a new leg already unfolding here to the downside. The next thing is that this evening star formation could actually be end of a wave D, which, as you can see, stopped exactly at 61.8% of this decline from 2016 down to 2018 lows. Okay, so I think we will see we will stay in a range for another 3-wave structure to the lower side of the range of this triangle that I'm tracking. So actually, I suspect that market is already trading at the start of wave E. Now, wave E is a corrective leg, which means it should be made by 3 waves. Similar like wave D to the upside, it was not that clear, but still it was also in 3 waves. Okay, this was first leg, sideways price action, then wave C to the upside. So I'm looking now also for continuation to the downside for wave E, as I said. And in fact, this decline here is clearly impulsive. You do not see any overlaps within this structure, which means that bears are very strong. Okay, they are not slow or corrective, maybe like an overlapping in a sideways price range. It was a very strong reversal from a new high, and clearly in 5 waves. If you go to the lower time frames chart, you can see here waves 1, 2, extended wave 3, small triangle for wave 4, and new low for wave 5. And now we know that in Elliott wave terminology, after every 5 waves are finished, you would expect a 3-wave rise. So this 3-wave rise ideally will take us back into this range around 113. It was also the area where this very strong drop actually occurred. It was, I believe, when stocks also turned to the downside 10 days back or so. So actually, this is the region that I would pay a very close attention, and I think that this could be also signaling when we see dollar yen moving into this resistance, that maybe stocks will again shift to the downside.
Hey, Wizard, I just want to let you know that Joe Perry agrees with you, if that gives you more conviction. He thought we'd get up to 113 before we failed.
Yes, I think that we already talked about this on Skype on Monday. So
yeah.
Yes, he said it about
kind of like when your work kind of confirms what I'm seeing, I have more conviction. I thought I'd let you know Joe sees the same thing.
Yes, that's very nice to hear. Also, we talked with Steve, just a second, with Steve about the 10-year US note yesterday, which, as you know, Blake and Dale, it should be an important indication when you're trading either equities or Japanese yen. So the idea about this one is that we have seen a completed 5-wave drop. And yesterday, when we were online with Steve, the price was at 61.8%. And I said at the time that if we will see a bounce from there, stocks will obviously move to the downside. And in fact, I was looking for a bounce because of a clear structure, because of a 3-wave setback. So what I'm looking at expecting on 10-year US note is actually a continuation even higher for a wave C, because even if we are just in a temporary rise corrective movement, we still need 3 waves. And normally these 3 waves would take you back to the starting, back to the end point of former wave 4, which was at September 18 swing high. So this level can be retested, and this means that stocks, which, as you can see, turned down yesterday immediately when 10-year bounced, which means that stocks could easily continue even lower. And with that in mind, with more upside in front for 10-year US note, with more risk of sentiment here, I think the dollar yen could actually really be maybe very nice short setup for next week. And I will be definitely watching for this price action if we see move into this resistance around 113.
And I don't think the market is really prepared for a move higher in bonds. I mean, I see it like you do, but I think the market it would really catch the market off guard too to see a big rally in bonds or a drop in yields.
Yes, I mean, at least temporary.
Yeah.
It looks like that we are heading to the upside, but not a major turn. So.
Maybe a delayed fuse flight to quality, Blake.
Yeah, I mean that's what I would be thinking. Sorry, Greg, go ahead.
Yeah, sure. We also can see some interesting price move on dollar CAD. Okay, it's probably because of that it's breaking higher at the moment. Okay, and if we go to the 4-hour chart, we also covered this with Steve yesterday. We said that there is a chance for this pair to continue even back to these September highs, especially because crude oil is under pressure, right? And if we take a look on crude oil, which is probably the most important structure on commodities right now, we have clearly 5 waves of decline from the high, okay? So it means that trend has changed from bullish to bearish mode. So at least bigger 3-wave drop is now unfolding. So I think that crude oil could actually take us even back to 63, possibly even $60 per barrel. So as long as we are trading to the downside within this new corrective setback, a bigger one on crude oil, I think that there can be even more opportunities still to join the uptrend on dollar CAD, which can be actually trading in this wave 3. In fact, I think that Blake also highlighted this as well a few weeks back, this important trend line that was retested and actually turned out to be a very good support right there. So as long as we are above this trend line, I really think this pair is in uptrend.
Awesome. Yeah, and you know, I'm looking at, and I know you're not connecting them because I can clearly see on your charts that you're not, but you can see those tops of the other trend lines. They all come in around this 131, you know, 131.15, 131.20. So that and it stopped the dollar Canadian right in its tracks. And so if we start taking out today's highs, it's going to be, you know.
You need this trend line, right?
No, I was just looking at the tops of from your wave one, you know, like the just those little tops, yeah, from there down. Yep, just like
okay.
Yeah, exactly.
You need this trend line.
Yeah, exactly. So so yeah, I mean,
yes, if we can get even above this, I mean, you know, here's the difference. Earlier I said what is an impulse? It's a clear, very clearly defined direction without overlaps. And if you take a look at this price action, okay, there are plenty of overlaps. There's no way that you can count this in 5 waves. So this is typical, very nice example of a counter trend price move. So this is why I'm even more confident once I have crude oil turning clearly bearish in 5 waves from the highs. I'm even more confident that after all, yes, dollar CAD has probably made a corrective setback and that we will, I think, sooner or later see a retest of this, maybe even June highs.
Wow. So, hey, you know, Greg, since obviously everybody's looking at equities right now, what's your view on the S&P currently?
As we said, on 10-year US notes, I'm expecting more upside. So obviously, S&P 500 could stay under pressure. On a daily chart, I'm looking at a very big flat correction. We have turned down from these first few resistance levels, but I still no wave 2 sometimes can be much more complex in price. So I would not be surprised if we see maybe even another retest of this maybe 2840, 2850 area. So if someone is looking for short, maybe it's better to, like we discussed with Steve yesterday as well, I think he's short with one part of position. So actually, it's maybe better to scale in position rather than trying to look for a sell-off and maybe take a very smaller risk at the highs, because you can clearly see another test of the high, because wave 2 can also be more complex. So I would be very patient here with trades, especially because on hourly chart, there's still not an impulsive turn down from the high. It's only a free wave fall at the moment. So, and it's Friday, and some position adjustment will maybe occur during the US session now, which may, after all, maybe even drive these stocks slightly to the upside to retest this resistance. But I think that any resistance that will be tested will sooner or later cause a new drop. And ideally, we will see aggressive sell-off next week. Now, here's also this interesting chart. It's S&P 500 versus crude oil. You can see that there was a very strong correlation actually from mid of August, right?
Yep.
You can see both move together. And actually, what has happened is that crude oil was actually probably leading the way to the downside. It broke to new lows a little bit earlier, and now we see that S&P 500 is trying to catch the downside. So if crude oil will continue to the downside, which I think it will because of that 5 waves drop from the highs, I think that S&P 500 could also stay under pressure. Not because I'm saying so, but because I'm looking at the price correlations.
Well, you know, it is Friday, and you know, crude oil typically has a good day on Friday. Doesn't mean today is going to be the exception to the rule, but you know, you know.
But, yes, but after all, we are expecting because of 5 waves drop, corrective recovery on crude oil, and maybe this one will start to unfold soon. So if we see a bounce on crude oil, a solid one, now here's 1 hour chart, I would be watching for first resistance at 71, maybe even more interesting at 72, where it was my way for.
Awesome. Well, Greg, do you have anything else that you want to share? Anything that's got your attention? I know Dale's got a interview here in a few minutes, and if you don't, I can always show a couple of charts as well. But is there anything else that's really caught your eye?
Actually, it's okay. That's everything what I wanted to say. So.
Okay. Well, hey, thank you for your input today. I really appreciate it. I'm going to take over just for the last few minutes, and your views are always so much appreciated, and I know everybody really loves to see, because, like I said, for me, it's like, it's all Greek to me, how they say that.
And Blake, there are thousands of Elyoticians out there, but only one wizard of waves, and that's
right.
Greg. That's Greg.
Right. He is. You're a gem. So thanks, Greg. I really appreciate it.
Thank you, buddy.
Thank you. Yeah.
All right. So, I was looking at the dollar Canadian just before, as Greg was talking, the downside has been very, very, very limited. And, that does risk more upside in the dollar Canadian if we don't, especially if risk turns lower. And you can see the S&P, we're really struggling with this previous support. It's acting as current resistance. And, despite all the quote unquote good news for risk, the S&P is really still kind of struggling here. As I mentioned earlier, I did want to cover just a couple of quick crosses for those of you guys that don't that trade them. So the Euro Aussie, really quick. This was a pretty big trend line that I was paying attention to because it was, if you see this, really bullish potential, big cup and handle looking, pattern. The problem is that we're failing here, and we haven't been able to build on this bullish move above the 160 level, and currently, we're starting to break back down. So now, typically, when you have risk off, the commodity currencies will underperform. So the euro will go higher, Aussie will go lower. But I think a lot of this has to do with the Italian issues. So what I'm trying to say is, I don't know if we should trade the Euro Aussie, Euro New Zealand on a risk on, risk off type of correlation anymore, because of the risks that are associated with the markets right now. And that same with the cable and the pound Aussie and the pound New Zealand, very similar type of situations with the Brexit risk. So now the cable, as you can see here, the pounds, we had a failed breakout, and that has led to a reversal, especially that we broke through this. Here, let me just grab. We broke back through this 184 level. Once we broke back through 184, selling has intensified in the pound Aussie. Pound New Zealand, very similar situation, 161% extension, failed rally attempt. Now we're breaking down, and the pound New Zealand is under quite a bit of pressure too. We may find some buyers down here in the pound New Zealand, just because the New Zealand, as I pointed out to you guys, the New Zealand dollar is up against really key resistance right now. Actually, we're knocking our head up against the channel resistance. So you got to be a little bit more careful with the Kiwi now. So, and the same would be for the Euro New Zealand. As you see, the Euro New Zealand has dropped pretty aggressively, but I think we're probably close to 127% extension of this move. We are actually on the 127% extension. So trying to play the Kiwi on the long side after such a steep move, you might see a little bit of a bounce back here to, let's say, the 175 level before we roll over. And I since I promised you guys I would show those crosses, I wanted to show them really quick before I turn it back over to Dale. So Dale, I know you have an interview, and
yes, sir.
All right, so I'm going to pass the screen to you. And guys, I just want to say, please visit our sponsor, Forest Park FX. They're great partners to have in your search to find a broker that'll fit your needs. Because of them, we broadcast these webinars, and they help bring all these great interviews, like Peter's interview that you're going to be having right now. So thanks, Dale. Thanks, everybody. TGIF. Thank you, Stelios, wherever he went. And it looks like he just left. So
Have a great weekend, Blake.
you too. Thanks, Coach.
Yeah,
Thank you.
recharge that battery, brother.
Well, I got a wedding to attend to. I'm best man.
Oh my God. Oh, well, have a great time.
Thanks. All right.
All right.
See you guys.
Hiya, Peter. I see you. I'm going to make you the presenter now. We haven't talked in such a long time. I'm really looking forward to it. If you guys want to get an interesting view on the market, stick around to listen to Peter and see his work. So you'll see a drop-down menu there, Peter, to share your screen, and also for your volume.
How are you doing?
Hiya, Peter. It really great.
I hear you loud and clear. Do you hear me?
I can, and God, I don't know how much time has passed since we did this, but really glad to be speaking to you. Hope all is well with you, and this is a great time for an interview because we're at a pretty interesting juncture, aren't we?
That's right. Yeah. It's been a while. It's been over 2 years, I think, since we last spoke. So I hope you're doing well too.
I'm doing okay. I'm doing fine. Grateful to be able to talk to guys like you and bring, insights to our community. So what are we looking at here? The NASDAQ Bank Index. Okay, so are
one
these
of many
small
charts? Yeah.
Yeah, okay. Are these the small banks or the money center?
These are all the this is a variety basically, but I noticed that this index has been extremely reliable insofar gauging, the overall sentiment of the market, among other things that I'm going to show you.
Yeah, because the banks have really been the laggard group, haven't been able to show leadership yet hardly able to even have great rebounds as a weak sister here, right? So
So on a closing basis, the high came in June. Then on a monthly high basis, the all-time high came in July. Yet some indices have managed to make new highs in recent months. So the bank index here, tracing it back to 2009, we had wave 1.
Yeah.
Followed by wave 2, which was the low of the October 2000 or the October 2011 low. And then from there on, we embarked on this breathtaking rally.
Oh, right back then's when we had the bet about the Pinto.
That's right. Okay. Exactly.
All
so when we were talking about the Pinto, we were at B of 3. And by the way, I used a different Elliott wave model. I used the harmonic Elliott wave model.
Yeah, I noticed. Last time we talked, you didn't have harmonics in there. So what a great example that, you've been doing this for decades, right?
Well, I've been doing it for a decade. Let's put it this way.
Okay. Well, 10 years is a long time.
Right.
And you evolved and you integrated something else into your process. So
that's right.
It goes to show that the markets are changing and we have to change with them.
That's right. Exactly.
Yeah. Cool, man.
So if you notice, even wave 1 here has the look of an ABC.
Yeah.
And then you have an ABC in wave 2, and then A of 3, actually, I should have put it right where the purple 5th wave is. A of 3 is up here. But this is the old chart, so I must have failed to move it over there. So we have A of 3, B of 3, and C of 3 to complete wave 3. And you see how you have this cluster of resistance, the top of the green channel, the pitchfork.
Yeah, you're using pitchforks too.
Right. And then you have, so I'm using multiple things to come to a consensus. And then you have the 3.382 extension of wave 1, which is a typical extension for wave 3. And also we came awful close to the ideal per my approach, the ideal target for wave 5, which was 44.56. So the channel basically put a hamper on that advance.
I bet
So
there were
now,
a lot of people looking for that 61.8 number, Peter. You know, that brings to mind something I say when everyone's looking for one number, it either doesn't get there or it's not as important when it gets there.
Right. Well, I don't know how many harmonic Elliott wave practitioners there are out there. I'm sure I'm one of the very few minorities, but usually people who look for a wave 5 target look at some sort of a Fibonacci projection based on the size of wave 1 or whatever. Here, the Fibonacci projection is the 0.618 projection of the entire length from the bottom of 1 to the top of 3 and then projected from 4. But anyways, let's not get into those details.
Yeah. Okay. Are you there? Lost you, Peter. Peter? I'd rather get into details than have sounds of silence. Anyway, I'm not sure what happened. What's this mean? Oh, you can draw. Okay, so Peter logged off. He's going to probably log back in. Let's stick around for him. And I'll let him talk and not interject as much. Sometimes I have to leave the room to stop myself. Okay, so we'll wait for Peter to come back in. No, go ahead. What's the punchline? The crab and the shark. What is it, Bob? Neither stayed tuna? Let's see, maybe he's trying to reach me on, could it be on Skype? No. Okay. Peter's offline. Except I still see his charts. We'll give it 5 more minutes, see if he comes back. Okay. Still don't see him. I'm the best guess for you. I'm waiting for next week, Rio. I'd love the opportunity to short yen up near 113. Okay, buddy. I also would like to see the market hold and not cave today. Well, thank you very much. I'm humbled. I think there's a counter trend buy in crude. Greg had just confirmed it. I'd love to see that inside week in the S&Ps play out the way I described it at the opening. Yeah, I think we're not going to have them back. Oh, you're very welcome, Marius. Glad you enjoyed. Sign up and find the best place for you to trade at through Trent at Forest Park FX. You could probably you're in, buddy? Okay, okay, thank you, Marius. So I hope everyone had a decent week. I know, if you just took Steve's crude short on the Saudi news, people buy headlines today, sell newspapers tomorrow. And Steve went the other way. Remember, everyone, if you had a great week, be grateful. And if you had a little bit of a drawdown, you need to play Tom Petty's song, I Won't Back Down. You need that type of warrior mentality to continue to do this. Okay. If you're approaching the market and you're saying, I hope this one works, don't even do the trade. That's weak. Instead, think this, Mr. Market, I've done my work. I'm ready. Prove me wrong. All right. Challenge the market. Don't make the markets challenging. All right. I just want to say I'm grateful for being part of the best team in one location on the net in my total career. I've never worked with as many very talented people. And, I could come in without one idea and just go to the traffic light page and have quite a few, let alone the pattern in play, let alone what happens in the chat room. So if you haven't joined, take this Friday to give it a shot, and you'll have the whole weekend to prepare. Remember, our best trades next week are prepared for over the weekend. And that's going to be a wrap. So don't just count your pips, count your blessings. I don't think Peter's returning. We'll reschedule him. And see everyone Monday. Adios. Thank you, everyone. You're our trading family. We are family. Adios.